Will Japan do another surprise attack on the United States and ruin our rally plans? Stay tuned, we'll explain.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Phil. So we have a little I told you so Friday to Monday, looking for a mini rally. We kind of washed out on Friday. Things were looking good first hour of the day. Then all of a sudden, a baseball bat hit the markets temporarily. And I think the Japanese officials were testing out a trial run. The market didn't like it. Do you want to explain what's happening here?
Yeah, so a tweet came out about 10 a.m. Eastern or so, and basically said that the Bank of Japan is going to revise their interest rate control. So they're looking to make the long-term interest rates more flexible than 1%, which is a huge shift in what we've been hearing out of them. And this is something we've been warning about. We've done a few videos on the Bank of Japan. And why that matters a lot is for you viewers is that, there's a thing called the carry trade. And the carry trade relies on cheap yen. And when I mean cheap yen, just very low interest rates. Only recently has the interest rate started to creep above zero. They were negative for a time. So it made borrowing yen to invest in our markets very, very attractive. That was a very easy trade to make money on. Well, now that's going to go away. That's going to take liquidity away from the markets. And one thing that you can look at is the relationship between the Japanese bonds and the USD JPY. In other words, how weak or strong is the yen compared to the dollar? So if we look at that chart, all right, so you can see over here, if you look on the left, what this is the 10-year Japanese bond. And yields were coming down. This is all from the great financial crisis. This is what this market was used to. Yields even went negative for a while there into that COVID mess. And then we came out of that with rising yields. Now, these lines here, this green line represents where they were first trying to cap yields at 0.25%. And you would ask, why are they trying to do that? Well, Japan can't really afford the yields to be very high on their debt. They have to repay the debt. And for them, it gets difficult as this rises. The problem that they have, it's basically a thing of lesser of two evils here. Because as they try to cap rates, what they have to do is they have to support their own bond market. That means they have to buy bonds. Well, how do they do that? Well, they just print yen. Well, the problem with printing yen is that it devalues your currency. And so what they've been doing as they've been trying to support this cap, right? The yen has just been getting worked. And so this chart here is the USD JPY. So in terms of the dollar's been just getting really strong against the yen. They have basically this 150 level on the USD JPY in which they don't want to see the yen surpass that because that could really start a inflation spiral for them. So right now, what we've been hearing from them is that, well, we're going to rethink our policy here of trying to keep our bond market in check, and we're going to let the rates rise. So that's a big shift. Now we have the Bank of Japan has their policy meeting tonight. We have ours on Wednesday. They have theirs tonight. And I think the markets are going to be very sensitive, Bob, to what comes out of their mouths tonight. Oftentimes they will put out a trial balloon just to see what the market reaction is. They'll do it during while our market is open. And if they like what the reaction is, they'll run with it. If they don't like the reaction, they may change what they say. So sometime between 11 p.m. Eastern and 12 midnight tonight, we'll get the answer. There could be a lot of volatility in the overnight future session. And I wouldn't be surprised if we have some sort of gap tomorrow. I don't know if it'll be up or down. It really depends on what they say, but I wouldn't be surprised if we're gapping one way or the other tomorrow. So you really have to kind of buckle up and maybe pay attention to the headlines overnight as to what the Bank of Japan is going to end up doing. Because if they get really hawkish here, remember, they're the last central bank that's being dovish. And usually when everybody's raising rates, there's not one central bank out there not following along. So I kind of suspect that eventually they're just going to get as hawkish as the rest of the central banks out there. And that's going to be a problem for the markets because that carry trade is going bye-bye. And that's really like one of the last few things that was giving positive liquidity to this market. Now we're in a situation where liquidity is tightening. The Fed's saying they're not budging on their quantitative tapering program. They're still going to be rolling off. And that really just leaves then the Treasury as to what is going to happen with liquidity in this market. So I think we got a lot of headwinds here, Bob, because of all this.
Yeah, and just explain to people more clearly is that, if you're borrowing money in a currency that's getting cheaper, even if you don't make any money on your trade, you're making money on the differential in the value of the currency. So when it goes the other way, it's like a twofer against you. And so people start pulling money out of the markets, they're taking risk off, and they're resupplying Japan and paying back those loans, and basically are disposing of yen, which makes the yen rise in value. So you get a twofer. Japan has been notorious doing this. They have trillions and trillions of yen out there speculating. And if that dries up, it's going to come out of our markets. And that's why we're very sensitive to that. And the trial balloon, I don't know, it only lasted about an hour, Phil, and they ran it up. So I don't know if they're going to accept this and hope that the Fed will be even more dovish than they are. But it may throw a little kink in just, hey, we're going to get a bigger relief rally. But we thought maybe this week was going to be a big move up for a couple days and then back down, and then a bigger move happen later in the month. So this might be just a one-day wonder here if the Fed's really hawkish. So nothing's going to be easy in this market over the next couple of weeks, that's for sure.
No, statistically, we're in for a bump at least for the next couple of days because the last week we had was negative. Then we go into the 4-day turn, which is the last 2 days of October and first 2 days of November. And that is a thing that market participants look forward to, especially if the trailing week is negative, which it was going into Friday. So statistically, it should end what would be November 2nd would be higher than today. We'll see. It could be flattish because we could just be chopping in a range too, but odds are we're not going to be down far unless something dramatically happens tonight. We also have the Treasury announcement tomorrow as far as what type of debt they're going to be issuing. The market is super sensitive to that. If she comes out with another T-bill heavy issuance over the next couple of months, then that will be positive for the market. That might counteract some of this. There's just a lot of cross currents right now. And then you have the rate announcement on Wednesday, and everyone's going to be the consensus is no rate raise, and I think that's going to be the case. What's going to be important is what he says after the announcement at the presser, which is a half an hour later. We will be live with that also, so stay tuned. We're going to get back to our live broadcast of that. But what he says there, if he's going to be hawkish, higher for longer type of thing, that's going to be a headwind for this market as well. So Bob, I think hard to say longer term how much of a bounce or how long the bounce is going to be until maybe after Wednesday. It's a critical juncture here because we're oversold. We're looking for a bounce, but we have like major announcements over the next couple of days here that's going to have to get digested by this market. I think it's going to be very choppy, very volatile. It might take a couple of days to figure out what direction we're going to get.
Yeah, we had a really good move today. I was satisfied. I already took some longs off the table. I left a runner just in case this thing does gap our direction, but nothing's going to be easier. And also, didn't the Treasury report a little bit less funding requirement these next 3 months than the last 3 months? So
yeah, less through the end of the year, but then more into Q1, I think it was. We'll get more details tomorrow. So it's interesting. So it's going to be a day-by-day market. But yeah, this what makes these markets fun. This is a big day today. If you made your week today, if you were listening to us on Friday and went long into the weekend, then you definitely could take some chips off the table and not be so aggressive the rest of the week. I know, at least in my situation, that's going to be true for me. I already made my week, and now I'm just going to be careful and look for good opportunities. All right, guys. Well, let us know your thoughts on all this and post them below. As always, thank you for watching. Check out our stuff over at tradegenius.co. If you want the newsletter to navigate these markets, we have that for you there, as well as our courses and our different bundles. If you want to get in the room with us, you can do that there as well. Thanks for watching. Thanks, Bob. We'll see you guys on the next video. Take care.
Trade Genius.